Hi, my name is Jamie Gordon, and today my partner Shelby Pargament and I are going to be discussing the Dogs of the Dow strategy. We are going to go into depth to decide if this strategy can effectively beat the stock market.
In 1991, the Dow of the Dog strategy started to become very successful and much more popular. The strategy is simply picking the 10 companies in the Dow with the highest yield from the prior year, and those companies become the dogs.
So this high yield is created because of a lowering in the price of their stock or minimal movement in the interest rate of the stock over a certain period of time. The idea is to buy stock in companies when it is unfavorable that they will be profitable in the upcoming years. The hope is that if you buy stock when the company's stock is considered low, that trends in the market will inevitably bring the company back up. This strategy proved to be successful at many times, but in many years it has also not been successful. We collected data from 5 different time periods. First, we looked at the Dogs of the Dow from 2015, then 2010, 2005, 2000, and 1996. We chose these specific time periods because we believe this accurately represents the past few decades when this strategy has been used. In the tables you will be seeing on the next few slides, they list the price, the yield, the percent change of the yield as well. We also included average yields of all the Dogs of the Dow 30, and the Dow Jones Industrial Index, which will help us figure out if the Dogs of the Dow were profitable within those years. We collected our information from the Dogs of the Dow website where they list the yearly statistics. The ideal situation after a year with investment in these companies is to see the stock rally and reach a lower yield. We also want to compare this with the rest of the companies in the Dow 30. In this chart from 2015, you can see that there is a little bit of decrease in the yield, which is good, especially when compared to the Dow 30, which increased by an average of 0.9%. This shows that the 10 companies had the highest yield at the beginning of the year have now decreased their yield more than the rest of the companies in the Dow 30. This is an example of an effective way the Dogs of the Dow strategy has worked. In 2010, the yield of Dogs of the Dow does not show the stocks to be profitable. In this case, it seems like the yields have increased greatly in both Dogs and the Dow 30. This is not a good scenario because the change in the yield of the Dogs of the Dow is higher than the change of the Dow 30, which means the Dogs of the Dow stock will not be profitable. This example shows the ways that the strategy can be very flawed. Looking at the yields in 2005, it seems like the Dogs of the Dow strategy proved effective. The Dow 30 yield percent change was negative 1.1%, while the Dogs of the Dow yield percent change was negative 8.9%. This shows that the Dogs of the Dow did in fact prove to be more profitable.
When you compare the Dogs of the Dow and the Dow 30 in 2000, it does not seem like the Dogs of the Dow were that profitable. This helps show that the Dogs of the Dow is not a consistent strategy. In 1996, the Dogs of the Dow strategy proved to be effective. We have looked at the past few decades where this strategy has been popular and have seen a variety of data. The Dogs of the Dow strategy sometimes works and sometimes proves to be ineffective. This shows the inconsistency and unreliability of this strategy. Of course, it is easy to look at these charts and make assumptions about the Dogs of the Dow strategy. But the reality is that there are many other factors that contribute to making a company's stock profitable. The Dogs of the Dow strategy seems to be effective at times. After doing research, we looked at a few other years besides the ones listed. In 1998 and 1999, the Dogs of the Dow struggled to keep up with the Dow. In the financial crisis in 2007 to 2009, we also found that the Dogs of the Dow did not do so well. These are just a few examples of circumstances which made the Dogs of the Dow ineffective. After doing research on the history of Dogs of the Dow, we believe that this strategy is not always effective. This research has made us come to the conclusion that it is very difficult to beat the stock market. We do not believe there is a true way of someone accomplishing this. There may be some methods like the Dogs of the Dow that can possibly predict the market at times, but we do not think that it is completely possible to fully succeed in predicting the market.